said, and those who've been turned down by banks, because a lot of times they walk out, and I just went to a seminar yesterday, and I'm teaming up with a number of bankers. We're not in competition. We're really supporting each other. And really, at the end of the day, whether they can do it or we can do it, the bottom line is to help that business owner get funding. $50K a month, doesn't too much matter about their credit. Make sure they have those at least 4 to 6 deposits. Now, making $50K a month is great. How much they keep is going to also be a determining factor too, right? Because I've seen those type of businesses that make really good income, but really good income is going out the door.
All right, welcome back to my channel. I have a special guest today. We're going to be talking about funding. I know y'all like money. The last time that I brought someone on, we were talking to Shirley about the SBA stuff. Y'all liked it. So I've been having a conversation with Ronit today. So I decided to bring her on the channel. Welcome to the channel, Ronit. How are you doing?
I'm doing fantastic. How are you?
I'm blessed. I'm blessed. So just a little bit about Ronit. She does revenue-based funding. So I wanted us to talk about that because I think some of y'all are gonna definitely get value from what she's talking about. It's not gonna be for everybody, but those of y'all that it's for you, it's definitely gonna be for you. So can we just start by talking about a little bit about what you do?
Sure. So I'm a business loan broker, and I service people, let's say, well, not people, well, I guess they are people, but small businesses who are looking for funding. And I service all 50 states, including Canada. And we have a unique product line because it's pretty much revenue based. It's not driven off credit. Okay, so you can have a score as low as 500 FICO. Yeah. So, that opens up the door for a lot of people to walk through, right?
Yeah.
No taxes required. And in addition to that, BKs and liens are okay. But you do have to be a business that's profitable, right? So that's the thing. It is based on revenue. So we pretty much put the criteria in terms of looking at the business and how much the business revenue is generating income, and therefore give us an idea on how much we can lend that business according to what the business is doing.
Gotcha. I'm just curious, is there like a certain, I know there's going to be a lot of factors, but let's say someone makes like maybe $500,000 in their business, they profit $500,000. How would you guys determine how much you can lend out to them?
Now, that is a great question. I try to stay out of the underwriting area because that's not my area.
That's not you.
I will tell you this. I will give you a basis that we go on. We generally lend up to 2 times the gross monthly income. Okay, that's what the general rule of thumb is. And so, but of course, it's going to be like anything. Every business is going to have their unique situations going on. So we have to look under the hood and see what we can do for you.
Gotcha. So what got you, I'm just curious, what got you into being a business loan broker?
Yeah, that's a great question. Well, I come from the insurance and financial services industry. And I've just, through the course of my career, just loved helping people, especially when it comes to, securing them with financial instruments or insurance and so forth. And so back in, I guess it was 2020, and just seeing what happened with the pandemic, a lot of businesses going out of business. And those effects are still happening today. Even though, we're past that time, the effects are still there. So just being out in the community, talking to other business owners, and just hearing what's going on, I decided to incorporate that into my practice. And pretty much it kind of took over because it became such a need. And what I found, whether you are a business that's been around or just pretty much starting up and you need capital, or a business has been around for 20 plus years, at the end of the day, businesses need money. They need funding. And I wanted to play that role and be a source to where I can provide those type of services.
Okay, that's good.
So it's been good. Yeah, it's been good.
So I know there's revenue-based funding. So you wouldn't work with startups, just to be clear?
Yeah, that's a great question. So here's the thing with our business model. We do work with startups, but it's like a 2-part question. If you're
Okay.
starting up a brand new business and you're you're the owner itself and you're starting up brand new, no, this would not be a product for you.
Yeah.
However, if you're starting a new business, but you're acquiring a business that's already been in business and you're taking over that business as a new business owner, yes, there's some funding we can look at because now we have a business to where the person who's selling you the business, we can potentially, I'm working on a deal like that right now. A person's looking to acquire a laundromat that's already generating revenue, right? And so now we're talking to the seller as far as seeing if allow the buyer to have financing through the business that he already has established revenue with. And now we can do that. And then that title, they can just transfer just a bit of paperwork and allow him to now buy that business through the loan that we provide for that business. So it's a really sweet deal that can happen, but you have to be buying a business that's already generating revenue and not just, blank slate buying something brand new, at least for us.
Okay. Okay, got it. So that situation you're working on right now, is that like a common thing do you come across, or what's something common that you come across?
Those are really common we come across because a lot of times what happens, like this particular business, from my understanding, the person selling, at first he just wanted cash, was not entertaining anything. But see, the conversation is different if you're still holding on to trying to sell this business 9 months later and it hasn't sold.
Yeah.
Right?
Yeah.
So now maybe some things you wasn't considering, you're considering now.
Yeah.
So yeah, we run into that a lot, especially if a business cannot sell. I actually partner up with a number of business brokers because business brokers, they actually go out there and help businesses buy and sell. And
Okay.
so a number of times there are businesses that stay on the market for a long time, but what ends up happening, that business needs cash now. So we'll come in and do some, short-term funding to help that business either to find someone they can sell it to that way, or to just have temporary funding until the deal happens. So we run into that a lot. I'll tell you my 3 types of people who I help.
I love it. Let's get it. Go ahead.
Yeah, so I help business owners
Mm-hmm.
who have been turned down from banks and
Mm.
can't, those people. I help business owners who can't qualify for banking financing, for traditional financing. People who've been in business for less than 2 years.
Yeah.
Usually the bank's not going to look at that, right? So those type of situations. And then I help people who need money now. Oftentimes, a lot of times, because it's alternative lending, yes, we get a boatload of people who can't qualify for traditional funding, but that's not always my client. Sometimes I have clients who have 800 plus credit scores and they can go get the funding. But what happens is, once again, I service the person who needs money now. So that type of person is coming to me, for example, they're a contractor. I have a project that's due this week that's going to make me XYZ dollars. And when it comes to time value of money, I'd rather have $500,000 this week than wait 2 months to get it, because now it's going to cost me more money waiting, right? So that's also my client.
Mm-hmm.
And we do a lot of business with people like that as well.
Okay.
Mm-hmm.
So it sounds like the time versus money aspect. Somebody that they're gonna get the money, but they need it now, so they'll be able to support, the loan because they're gonna have money coming in anyways. That.
Yeah, absolutely. Absolutely. And like I said, and those who've been turned down by banks,
Yeah.
because a lot of times they walk out and I just went to a seminar yesterday and I'm teaming up with a number of bankers because we're not in competition. We're really supporting each other. And really at the end of the day, whether they can do it or we can do it, the bottom line is to help that business owner get funding. And I
Exactly.
love bankers that I deal with that are open-minded to that concept, knowing that, when you sit down and you tell someone no, you want to give them a resource, a reliable resource a trusted resource that you can actually send them to and say, hey, listen, we couldn't do it, but by the way, I have someone who may be able to offer you that, other than just saying, you don't qualify. They walk out the door, they feel less than, their self-esteem goes into the tank. And sometimes they really don't know what to do at that point. And the banks, they can actually put themselves in position, the business bankers, I should say, put themselves in positions to be that resource for those business owners so that when that happens, they can still help.
Got it. Okay.
Yep.
Can you, because I know it's going to be some people that's watching this, they heard earlier, as low as 500 credit score, their eyes lit up, but it's not for
Yeah,
everybody. So can we talk about who
it's
it's like
not.
not
So
for? Talk
let's
about
go
that.
there.
Yeah.
Revenue-based loans, I even go there and say this. I use the word revenue-based because really that's what it is, but a lot of people call them MCA. So let's
Yeah.
just put that on the table. I like to throw the elephant in the room, right? So when it comes to MCA, it has a lot of bad rap. And the reason why it was never designed to hurt the business owner.
Mm-hmm.
These plans were designed to help, and they have helped tremendously. But because of the nature of how they work, and it's not just the MCA product, in alternative lending. And I remember back before the real estate boom bursted in 2008, you had predatory lending happening. People were getting into homes that should have never qualified for a home. So then foreclosures start happening by the numbers, right? When things went, topsy-turvy. Well, here's the thing. At that point in 2008, alternative lending came into play because banks were just not lending like they used to. They didn't have it. They didn't have the means to do so because of the economic environment, still happening today. Well, the alternative lending space was born. And because of that, happens in the industry, it's just not our industry. You're going to have bad apples come into play. And what happens, the reason why they got a bad rap, because there's people that are in these loans that should have never been in these loans. What I love about what I do and the lenders that I partner up with, because I partner up with direct lenders, if in fact the revenue is not there to support these type of loans, we would just decline, flat out decline. But we've seen industry reports where those same type of people have gone elsewhere and they'll give them the loan, knowing that they're going to default. Yeah. That's what makes this industry that name MCA bad. It's not a bad loan. Is it pricey? Absolutely it is. And it should be. And I'll tell you why. It's a high risk loan. I always flip it. I told a lady, I was at the seminar and she's like, well, what's the interest rate on these different loans? And it's a factor rate. It's not an interest rate. So it's slightly different because factor rates, they differ from an interest rate. I don't want to get all into the details and specifics because that's really out of my territory, but I know when I saw the calculations and when it's been explained to me, it is different. And so we were talking and I said, listen, they are a bit higher, but they're used for they can be used for the right purpose. Okay. So number one, there's pros and there's cons. But the con is, yeah, they are higher. The pro is going to be tax deductible. So it's not like you're at a loss. You can write it off. And as business owner, and I know personally, we're always looking for write-offs at the end of the year. So it's something you can write off at the expense of the loan. Okay. But not only that, it can be what we call a bridge loan. It's something that can help you in the time being. And that's why partnering up with the right person will make sense for you. Let me give you an example. Because how I use these, if someone has bad credit, let's go ahead, if you can qualify, get you into a loan where you can get you some money. Because at the end of the day, you're still going to need some funding. Get you some funding. But how we operate is this. We just want to see a history and develop a payment history with you. So with that being the case, you get the loan. That's usually the first one's going to be a starter loan. We're going to circle back 60 days from now. Make your payments on time. And as you make your payments on time, 60 days from now, we can look at either giving you more money, wrapping that into a new loan and extending it out more, or even if it doesn't require new money, maybe at that point, even extending it out with better terms. We want to get to the point to where we can trust you with the money, but these are unsecured, no recourse, non-recourse. It doesn't even have a personal guarantee. That means a person can take that money and just run and we'll never see it again. Now they won't get a loan in this industry, but that's high risk. So let me get back to my point. I was asking the lady, I said, let me flip it for you. I said, okay, let's say you borrowed $100,000, you qualify for $100,000 and the factor rate was 1.25. That would mean you have to pay back $125,000. on $100,000 loan. Okay.
Yeah.
I said, now, this loan, you got qualified because you sent in a application. I said, I want you to act like this is your money. And I'm that person that got the money. So I sent in an application. I sent in 6 months bank statements. I don't send you any taxes. They do a few industry reports to make sure that, you are who you say you are. But then based on that alone and a few other, determining factors, they do pull a soft credit pull. I'm just going to give you $100,000 that I can deposit right in your account, and you can do whatever you want to do with it, based on the hopes that you're going to pay me back based on everything I just said. And now, not to mention, you've been turned down by the bank. Would you lend me that money? And then,
Damn. I don't know, man.
right.
I'm gonna assume the 100 is gone. Me personally.
Right. No personal guarantee. That means
Yeah.
I don't have nothing to go after you for this money, other than just, having a bad report. I had someone who's a part of my team,
Yeah.
and this person was a doctor and applied for the loan. And it looks like she was going to get the loan, but when they ran a report, and that's why I tell people, pay the loan. She defaulted on the loan back in 2021, 22, something like that, with another company, but they were able to see that. Of course, she got declined, right? So yes, a person may run off with the money, but you won't be able to get another loan in this industry. And at some point, there may come a time where you need some money. So pay the loan. But that's why the factor rates come into play, and they're a little more elevated. Why? Because they're taking a much bigger risk. Yeah, absolutely. Absolutely. So that's why. And then, like I said, they're not for everyone, but for the person who's generating revenue, our rule of thumb is, if you're generating revenue of $25,000 per month and gross income, you're a good candidate to qualify. I have taken a look at some that are slightly less, but we like 25K, around 25K. Why? Because that person's generating some income, so they can show proof that not only that the loan will get paid off, but they can afford the loan. Right?
And you said that 25K is gross, not net.
Gross. It's gross.
Oh wow, that's a good deal. Yeah, okay.
Yeah, it's gross. It's gross. Yeah. So we just got to see that you're earning something, Yeah, and that you're profitable. And I can't tell the amount of repeat customers we get because of our business strategy. And me personally, I bring on different relationships, like people like yourself with the credit, right? So if a person had bad credit, well, we're not just going to put you in a loan and say, okay, well, let's just go ahead and do the loan and just keep putting you in these loans. Our whole objective is to get you up to par level, or above par, so that you can now borrow money at the best rate possible. So maybe you can qualify for a bank loan down the road, because face it, they do have the best rates. They're just not approving everybody. They're not approving most people.
Yeah.
So but let's go ahead and strategize to get you where you need to go. Let's not keep you in the mess.
Yeah.
Yeah.
No, I mean, that makes sense, because if your credit is right, the income right and everything, you're gonna get the best rates. But if you just happen to be in that situation, you had a bad credit or you got turned down by the banks, it's business. You got to give up something. So it's gonna be,
Right. It's so funny, the people I run into, and they're like, oh my God, it's gonna pay a little bit more. Okay, but what's the alternative? Either you're gonna pay in time. Yeah, go fix your credit and see what you can do 6 months.
That takes time.
That takes time, right? But let's go ahead. I mean, I can't tell you the amount of people who are like so thankful, because we were able to help them just to meet payroll. We kept the doors open, and that's big for a business, because, it's the funding that helps these things take place. Or sometimes they're in between, maybe getting a contract, haven't gotten that contract yet, and it's about to close, but they need money. That's what these loans are made for, to provide those type of funds in those type of situations. We still get the standard, equipment financing, needing inventory, even people, I've had restaurants who want more footsteps coming through the door and they have to beef up their marketing, but they don't have much, room for maybe, marketing dollars, and they'll get the loan so that they can increase their marketing and bring more foots in the doors. And so those type of things we do. And yeah, but like I said, it's not for everyone, but it's perfect for the perfect person.
Yeah,
Mhm.
definitely sounds like it. Do you have anybody,
Yeah.
I guess off the top of your head, that's like a memorable experience of a loan that you helped fund? To just give the audience just some insight into that process, I guess. Or are they usually
Um,
similar? Like, I don't know if you have any standout clients that you can remember.
Standout clients, let me think. Of course,
Or
the
maybe even the
ones who
last person you funded.
last person funded. So the last person funded was, um, what was it? A church. I think it was
Church?
150,000. Yeah. Yeah. So we do nonprofits as well, but
Okay.
it's funny when I say nonprofits because, um, they still have to be profitable. Still have to
Yeah.
show revenue. Yeah.
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 Yeah. Yeah.
Yeah. So
Yeah.
that was an experience seeing that particular situation because, most think, oh, because it's nonprofit, it's not generating any money. No, when it's, they have revenue coming in, we can still supply those loans. So we were able to do that. It was a situation where they were trying to do some additional things along with the church, another project along with the church, and they needed additional funds to do that. And we were able to supply those funds. Another one that's I can think of is when we do the cannabis. A lot of people won't touch those.
Oh, sure. Okay.
The,
That's important.
yeah,
Yeah,
that
let's talk about
industry.
that. We don't know who's watching, so let's talk about that one.
Yeah, I mean, a lot of people won't touch that, but we will, and we have. We have. It's not some of our easiest loans to do,
Yeah.
but we have, and we will do them. A business is a business is a business to us. So whether you're sole prop, whether you are LLC, C Corp, S Corp, doesn't matter. As long as you have a business bank statement, because that's all it requires. It's the most current 6 months bank statements
Mm-hmm.
and a simple application. And we will go up to $1 million. And the nice thing about it, we fund those loans quick.
Mm.
I used to say between 1 to 3 business days, but we have business. And that shows, the business that's out there, but also the integrity of what we do. We have about 18,000 applications coming in a day.
Mm.
And we fund about 2,000 of those every single day. So I usually say now we can get it done within 3 days, 3 to 4 days, at least within the week. We'll have you funded and that money in the bank. And so that's why, even like I said, a lot of our, even people who can qualify for the bank loans and traditional funding, they like these revenue-based loans because they have access quickly.
Mm-hmm.
And that can really help, especially depending on if you're on a timeline of a project that you need to get done that's going to generate money. And our loans are designed to help you make money or save money. If it can't do either, we shouldn't be doing business.
That's
Yep.
good. I like
Yeah,
that. So you said
absolutely.
the church one was 150,000? Was that what was loaned out? No?
150,000. Yes, our average loan is about $108,000.
Okay. Is that just like in general, or you like your segment specifically, or
No, that's in general.
oh, in general? Okay.
In general.
About 108,000. Okay.
Yeah.
What about
Well,
what
no,
about the
when I
cannabis?
say, well, I should say our company, not the industry,
Oh,
not
okay.
the
That's
industry. Our company has about $108,000 average. That's the average loan. We get them all. We get small ones too. I've gotten loans where, of course, the revenue was much less, where someone just needed a quick $15,000. So we do the small loans as well. But like I said, the revenue was there to provide that, but it wasn't as much as someone, you know, who would get $108,000-$150,000 loan.
Got it. So someone that gets like the 15,000, let's say, you know, their revenue's lower versus someone that maybe they got 500,000. Is it the same energy required to complete the paperwork, or is there more checks because of the amount, or no?
No, it may take a little bit more time. So someone that gets 15,000, I may get an answer today. Someone
Mm,
with 500,000, it may take 4 days. Why? Because they're going to pull a little bit more reports
yeah.
to find out more. But here's the thing, which is interesting. It's not going to require that much. It's going to be the same requirements, but the reason why I'm hesitant to say, because underwriting sometimes come back with things because they see things that we cannot. Let me give you an example. We don't ask for taxes, but I have seen them ask for maybe, last year's taxes to make their decision. But it's going to be based on, because a lot of times they pull reports, that financial reports and what they call industry reports, that give them information on a business that warrants them to ask for certain things. Right. So, like I was dealing with a company, and this particular company, I won't name what type of company it is because I don't want to be too obvious in case someone sees it. But I was dealing with this company, and the company was doing, I don't know, revenue about 200K a month. Right. And so it was looking really good as far as what they was asking for, as far as what they was going to get, and all those things. But as we got deeper into it, which was just a number of days, they asked for tax returns. So I'm always, what asked for tax returns? Come to find out, they were in litigation being sued.
Oh, dang.
Yeah. So I didn't know that, but that's,
Yeah.
we I stay in my lane, allow underwriting. I trust them to do what they do because they know what they do to get the job done. But they want the deal done just as much as I do. They're incentivized, so they want the deal done. But we have to put in good deals so that on the other side, the business owner's in good shape and the company gets the money, get the profit too. So it's supposed to be a win-win for everyone.
Definitely.
Mm-hmm.
Okay.
Yeah.
Is there like
so
is there
yeah,
like
that's pretty interesting, but yeah.
Yeah. Is there like a particular industry that I guess you like working with, or do you come across a lot just in your own experience? I know it might be different for everybody, but I'm just curious.
Yeah. Well, I like all industries, but I love restaurants.
Okay. Why?
I love because the revenue is there. It's typically a very simple business model to get them along, get them processed and everything. I mean, some industries are harder than others. Right. And it doesn't matter if you're at a brick and mortar location or you work from home. That doesn't matter. But when it comes to restaurants, when it comes to service-based businesses, they typically have, the revenue there and a constant stream and flow of income coming in. So this business model really works with, people like that, contractors, plumbers, electricians, those guys do very well. Landscaping companies. Why? Because they have, companies, they have cash flow. Gyms, now sometimes what happens, when you have gyms or people who have those type of establishments, they can be seasonal, because we all know the first quarter of the year they're doing amazing, right? Then it kind of tapers
So
off.
you're a new me.
Right. So with the seasonal, they're great, but I always encourage, hey, if you're looking for funding, it's going to be very advantageous for you to look for funding while revenue's up, not while you're going through your seasonal time. So I've had people to apply during the seasonal time. It's kind of like, well, you're probably not going to get it now, right?
Yeah.
Because you're in a dark place right now, but we know it's going to pick up. But what we will do, we'll look at businesses that are on an upward swing, and now the revenue is picking up and there's a trend going up. We're not going to give you a loan when you're trending backwards. because that's a telltale sign. But if you're out of that season and you're going up, or while you're thriving, get the loan then. Even if you got to get the loan and put it to the side and just pay it, right? And wait until your season is going to come up next month. Now you have funds. I had someone that happened to. Actually wasn't a season. It was someone, it's pretty interesting. Sometimes business owners, they'll get into this space of wanting the funding, but then deciding, maybe I'll hold off. And then I had a particular situation where someone, this person was a loan broker on my team. Someone actually did a loan and they held off, let's say December. But then May comes around, they're like, oh my God, I really need this loan. Now, when you applied in December, there was something telling you here, in your head that you needed this loan. You knew your situation then. It just wasn't maybe as, really dire, and like it was in May, but you knew. You had that feeling that things were maybe, changing, could have been seasonal, whatever. Get a loan. Because the last thing you want to do, especially with a revenue-based loan, is now get it when your business has obviously trended backwards.
Yeah.
So it's so that now the savvy business owner knows, get the loan. Now you're going through your seasonal time, but now you have monies to get you through. So when things pick up again, you're good.
You're good.
That's how it works. That's how it works.
Yeah.
Yes.
So in that type of situation, like it's December, they're like, okay, no, I'm good. Do you guys just like let it go, or do you guys kind of like let them know, like, down the line, your business may not be doing the same as it was, and then, or how does that conversation even go when they say like, oh no, we're good, we don't want to proceed anymore?
No, that wasn't my particular, I'm just thinking about
Oh,
this.
okay.
That wasn't my
Okay.
personal client,
Okay.
but that's what I would have. So I'm learning also now too, to jump in those situations and say, hey, listen, let me talk to that business owner, let them know. Ultimately, it's your decision, right? The last thing I'm going to do is talk anyone into, doing something they really they're not all in with it. You have to feel
Yeah,
good.
exactly.
Yeah, if you don't feel good about it, don't do it.
Yeah, exactly.
But let's look at this overall picture. Let's go ahead and do it based on where because you're people don't just request a loan for the purpose of requesting a loan. There's a purpose behind it. So the question would be, why did you ask for the money? Because you want to get down to, you just don't wake up going, I need a loan. Who does that, right? There's always a purpose.
Exactly.
What is that? So what I'm having some of my, partners or loan officers, not officers, loan officers, business loan brokers that are a part of my team, because I have a team that I oversee. I'm encouraging them now to ask more questions, because when you ask more questions, you're able to get down to, the core reason of why we're here. And then once you know that, now we can direct you further or give advice on, hey, listen, well, this is, you may want to take a look at this perspective, so that when this comes up, you're in good position. So yeah, but it was just interesting to me how that happened. Like, you took out a loan, you declined it, you was approved. And then in May, you circle back and we had to decline you. And you wasn't approved. But
Yeah.
So it's just interesting how those things work. But it's a part of the territory, I guess, in the business model that I'm in. But I have fun with it. I love helping people. I love seeing businesses grow. I believe everyone should have access to funding. It may not, like I said, this is a non-traditional way. It may not be the traditional sense of how you qualify, but that could be to your benefit too, because that's why a lot of people are getting turned down. Some people haven't even filed this year's taxes yet. And if they're asking for taxes, well, some business owners haven't even filed yet. They had extensions or, so things like that. So where our company only asks for the bank statements, because there's a lot of things that you discover in a business is by their business bank statements and their behavior and how, they handle money and where the money's going. And one of the things we look at too for qualifying purposes is how many deposits they have. We like to see about 4 to 6 deposits. And that's why restaurants are like some of my best customers. And like I said, the other ones that I mentioned. Why? Because they have many clients. Let me give you an example. I was working with someone who has a courier business. Couldn't help him at the time, but I was working with someone who has a courier business. Here's the issue with that. His business is growing, looking pretty good for, maybe we can partner up maybe somewhere down the line. He only has one contract. That's a problem for our business model. Why? What if that contract cancels? He's out of business, right? So we look for at least 4 to 6 different accounts. Well, a restaurant has customers coming in all day. So, they get that. We have someone got a landscaping business. Oh, they got a ton of customers. So they lose one, no problem, right? Mm-hmm. Someone has an automotive shop. Well, they have cars coming in, So those are our favorite. But do we do courier services? Yes. But we make sure they have more than one account, 2 accounts, because those drop off, revenue done shot down.
Yeah.
Right. So that's how our business model works in terms of that. And when you talked about the customers of who we like I said, a business is a business. But those are things we have to look at because once again, we're lending unsecured money.
Yeah, it's a risk.
Right. No collateral whatsoever.
Yeah, it's crazy.
Yeah.
But we're gonna be wrapping up in a little bit, but I had a question. Let's say somebody, they're doing 50K a month right now. They just got denied from the banks for whatever reason.
Right.
And they're watching this interview. They're like, okay, I like what Ron is talking about. I'm trying to tap in. What piece of advice would you have for them? Do any due diligence research on their situation? Is there anything that they need to dot their I's, cross their T's? Like they make 50K a month. Their credit is just bad for whatever reason. What would you recommend to them?
So 50K a month, doesn't too much matter about their credit. Make sure they have those at least 4 to 6 deposits. Mm-hmm. Now, making 50K a month is great. How much they keep is going to also be a determining factor too. Right? Because I've seen those type of businesses that make really good income, but really good income is going out the door. So we want to make sure that you can show, you don't want to make $50,000 a month and $50,900 is going out.
Yeah.
Right. So at the end of the day, even though we qualify you on the gross, we're going to look at the net. That's just smart business. We have to look at what we have. Yeah. So make sure that, at the end of the day, we have to make it make sense. Right. We have to make the picture, you have to be in a situation where you can show proof just by the revenue alone that it's justifiable. You can get the loan and that you can pay it back. Mm-hmm. Right. And so that's pretty much where you want to be. I think the industry said something around 16 to 18% of the gross monthly income you want to. Don't get me in the statistics. That's why I don't quote them that much. It's something like that. Well, it's a factor. It's a factor. You can look it up online, but it's a factor as far as making sure the amount you have in your net is there. So after everything's paid, your expenses and everything else that you do, that you have enough left over that you can justify that you can pay this loan. And the other thing you want to make sure that we also pay attention to how many overdrafts the person has in their banking. Make sure the fewer the better. We will allow you, which is crazy, we will allow you up to 7 insufficient days. So out of
pretty crazy
a month. Yeah. And I've seen that happen where, okay, on the 19th, this person was negative. On the 25th, this person was negative. Okay, that'll fly by us. It's okay, right? But you can't be negative. Well, there's no money there. you know? Yeah, and sometimes what's interesting is that the money's coming through the door looks pretty good. When you
Mhm.
start getting in the, the devil's in the details, right? You start getting into the details, you're like, whoa, there's no money here to pay it back. So
Yeah.
just make sure as you're, really handling your money for someone who's making $50,000 a month, that's going to be very important. Not only how much you come in, but how much you keep of it, so you can justify being able to get a loan. Because someone with that income should be able to qualify for what we do and get money, no problem.
Mhm.
Here's the other thing: sometimes people come to us and they get less than what they wanted, right? And like I said, a lot of times our first loans will be what we call starter loans. We'll start you out. So let's say, for example, you wanted 100,000. We may give you 65. We may give you 40. It's all up to underwriting.
Mhm.
But that's not the end of the story. That's us testing the waters to see how we can trust you. So what happens is here, I want the audience to know, with our loans, you're formulating a relationship.
Yeah.
Our company wants to be a funding partner, because we know long term, you're going to need money again. We
Yeah.
literally have some people who have established a relationship with us for a period of time that now they can call and say they need $100,000. It's in their account same day.
Mm.
They don't have to go through all the processes of waiting and filling out applications, none of that. Why? Because the trust is there.
Mhm.
And so that's the relationship we want to build with business partners, that we can have that. And it's going to be based on how you pay that loan back. You pay that back consistently. We don't care what your credit is. Now, I care what your credit is, because what I do is that while you're working on that and while you have the loan and you're doing all the things you want to do, in the background, I'm going to send you to a credit professional like yourself to be able to help that person to get them up to where they need to be. Because at the same time, while everything's being taken care of, you still want your financial picture to be, to be right.
Yeah.
Yeah, but our company just goes ahead and lend the money. But that's where we'll establish a relationship, and we'll work on getting you to a place where you really want to be. That's why you went in business, right? So everything can be rocking and rolling, and you be at the top of your game.
Most definitely. And
Mhm.
anyone that's a subscriber or has been subscribed to me for a while should not have a problem fixing their credit. There's no excuse if you've been following me. So I mean, you should
Right?
definitely be good to go. So no, I definitely feel what you're saying. So
Yeah.
I guess as we wrap up, do you have any last piece of advice for anybody that's, watching the channel? Maybe they're in a situation, they're doing good in their business, but they need that funding. It's like, oh, I've been doing good, but now the business is not going as well. Is this my, divine timing to go ahead and get the funding? Like, what kind of words of advice do you have for someone as we
Business
close
not
out?
going well. Business not going well looks different for different people,
That's
right?
true.
Business not going well can mean that right now maybe you're down 20%. Doesn't mean you're not generating an income.
Yeah.
So as long as you're generating something, and like I said, when we give you the loan, our loans are designed to, we know after looking at what you have coming in and what's going out, we know you can afford to pay this. Because if you
Mhm.
can't afford to pay it, we will decline you.
Yeah.
Right? We're
Yeah.
not going to put you we don't take businesses. We've never taken a business. There's other companies out there. The company defaults, they'll take the business. We don't want to accumulate businesses. That's not what we went in business for, right? This is
Hmm.
private money, and this particular money comes from an individual who made a lot of money in the industry of lending space, and have seen the good, the bad, and the ugly, and wanted to put together his money along with other avenues through Chase Bank and other lenders that he has access to be able to put his money on the street, so that now business owners can have access to the funding that they need, and no one has to be denied funding when they could qualify for it, especially when you're leaning on the revenue of the business.
Hmm.
Right. So, yeah. So somebody like that, I would say definitely reach out to me, because let's see what we can do. Hopefully we can do something. If we can't, we'll let you know. Sometimes we have to circle back and do it 90 days later when things pick up, or sometimes we can go ahead and give you something now. The thing is, it's a soft credit pool. So, you're good there. And it's a simple application. It's one page. And then the 6 months bank statements, and let underwriting do what they do and see what we can offer. And at that point, we'll work together to see, move forward. And if it's something, like I said, sometimes we'll give a little less. And that's because we're establishing that relationship. That's not the end of the story. You don't have to put the loan off to get more money. In 60, 90 days, we can circle back. I've done that many a times where we circle back and we'll get, well, oh, wow, this person's paying a loan on time. Wow, let's give them $20,000 more. We'll roll that over into one loan and extend out the terms and even give you better terms. Why? Because we're building that relationship. We can trust you with money.
Yeah.
And we actually have some people who get just as good at rates as banks, actually. But that's because they've established that relationship. So, yeah, it's all about that. If we can trust you with the money, we'll continue to give it to you and give you better terms on it. But you have to start somewhere. You have to start somewhere. And remember, it is tax deductible for the expense of the loan. So it's not like, well, you got this high loan and nothing. You can write off the expense of the loan, the money you pay back on your taxes. So it can be a win-win for the right person. So yeah, contact me and let's see what we can do.
Appreciate you, Ronit. I know someone or many people are going to get value from this. And, if you're watching this and you're in that situation, you watch the interview, you're like, okay, I'm feeling what Ronit is saying. I'm going to leave her information below for y'all to, tap in, say you came from my channel, and then, we'll go from there. With that being said, y'all have a blessed one.